Yeah. The Subcommittee on Housing and Insurance will come to order. Without objection, the chair is authorized to declare a recess of the committee at any time. This hearing is entitled The Reauthorization of the National Flood Insurance Program, FEMA's Perspective. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. I now recognize myself for 5 minutes for an opening statement. Mr. Maurstad, thank you for your appearing today for the second hearing of the Housing and Insurance Subcommittee for the 118th Congress. FEMA plays a vital role through their disaster recovery efforts, and today we will explore its management of the National Flood Insurance Program, which has existed for over 50 years and until recently has operated in the same manner and relied on the same outdated tools since its creation. And I just applaud the progress that you're making, as flooding in the United States is a significant and costly problem for both coastal and inland residents. Unfortunately, there's only one provider for nearly all residential flood insurance, the government-backed NFIP program, which sells 93 to 95% of all residential flood insurance in the country. That's not just a bad idea from the perspective of creating a workable insurance model. It has also proved to be costly for taxpayers. To date, the program finds itself $20.5 billion in debt, even after Congress outright forgave $16 billion just a few years ago. It seems clear to me that the program is in desperate need of reform, and I'm glad that FEMA is bringing that reform. The process needs to start with this hearing and with a reauthorization, which we hope this hearing will help us achieve the consensus to pass with legislation. Lately, the committee's not been too involved in the oversight of ongoing operations of the program. Today is the first time we've heard from FEMA on NFIP in over 6 years. That's something we need to get more serious about if we're going to modernize the program that was created before the moon landing in the 60s. This committee has an important role to play in its oversight of NFIP, and through hearings like this, Congress can identify whether the program is operating in an effective and transparent manner. Congress, however, has been missing in action from that job as the previous majority left the program on autopilot through a series of short-term extensions and appropriations bills, and frankly, the previous Republican majority didn't finish a major reform. That has not only removed us from the process, it has made the program vulnerable to uncertainty for its 4.7 million policyholders. We can and must do better. To ensure the stability, while Congress does this important work of reforming the program on a longer-term basis, I've introduced H.R. 1392, the NFIP Extension Act of 2023, which would reauthorize the program through at least December 2024. This bill would not only avoid a lapse in coverage, but it would also give this committee the time and deadline freedom it needs to do a deeper dive into flood insurance reforms and conduct additional hearings on NFIP, engage stakeholders, and craft a longer-term reauthorization. This work is crucial and will ensure the program is moving in the right direction for taxpayers, policyholders, and particularly given FEMA's recent internal work to incorporate industry best practices and technology into its management of the program. That includes, most notably, the work regarding the adoption of Risk Rating 2.0 methodology, which is a transformative initiative to modernize how it accurately measures flood risk. Risk Rating 2.0 is a good first step in moving towards long-term financial visibility for NFIP, and one that certainly deserves our attention to ensure this program can serve communities most at risk of flood events and remain viable for years to come. I look forward to exploring it and FEMA's other recent modernization acts with you today, and so we may have a set of policy recommendations for Congress on reforms that will get this program on a sustainable path. With that, I thank our witness for this testimony today, and I look forward to the conversation. I yield, and I now recognize the ranking member, Cleaver from Missouri, for 4 minutes for an opening statement.
Thank you very much, Mr. Chairman. And let me preface my comments by saying that I look forward to working with you. I think this is a serious and significant issue that we have to give a great deal of our time and interest and creativity to resolve. Floods are the most frequent and severe weather threat and the costliest natural disaster facing the United States of America. Flooding events have occurred in all 50 states and 98% of U.S. counties. And according to the Department of Homeland Security, 90% of natural disasters in the United States involve flooding. Supercharged by climate change, these natural disasters are increasing in both frequency and severity. Shortly after I was elected, Katrina hit. And at that time, our ranking member, Ms. Waters and Ms. Biggert, and led a delegation down to Mississippi and Louisiana. We saw firsthand what devastation had occurred in that area. And since Katrina, we've had significant events even on the East Coast, even in New Jersey and New York. We need to address this issue. Hurricane Katrina was destructive, and it cost a great deal of money, the costliest flood in U.S. history, which means that the National Flood Insurance Program was hit with major losses and is still struggling. This includes $16.2 billion for Hurricane Katrina, $1.3 billion for Hurricane Irene, $8.8 billion for Hurricane Sandy, and $1.1 billion for Hurricane Irma, $1.5 billion for Hurricane Ida, and others. The NFIP is indispensable to the resiliency of American communities and more than 5 million policyholders. Many of these families are low and moderate income or forced to live in flood-prone areas due to the affordable housing crisis that this committee has not yet held a hearing on this Congress. However, the growing strength of floods and the storms that cause them are increasingly straining financial health of the NFIP. The NFIP is now over $20 billion in debt, and the program pays well over $1 million a day in U.S. Treasury interest. This is the third largest NFIP activity by cost. In no unclear terms, the current program is fiscally unsustainable. All 50 states, I said earlier, but that also includes the territories, or should include the territories. In many ways, they've been dealt with almost as if they were stepchildren to the United States of America. In no unclear terms, the current program is fiscally unsustainable. NFIP reauthorization, and what should be a long-term reauthorization, is an opportunity to put the program on sound financial footing, increase risk analysis and communication, improve community resilience, and make technical and operational enhancements to the program. This committee has an opportunity to make our families, businesses, and communities safer and more resilient, and to build and rebuild in a way that meets the challenge of the reality of climate change. I am interested to see the Republican plan on flood reform, as I just mentioned to the chair, and I intend to make myself available to work with him. And thank you very much. I yield back.
The ranking member yields back. The chair now recognizes the chairman of the full committee, Mr. McHenry, for 1 minute.
Well, I want to thank the chair and the ranking member. I want to thank members of this committee for working in a bipartisan way to reauthorize the flood insurance program. This continues on the work that then Chairwoman Waters and I, as ranking member, worked on 4 years ago to reauthorize the program in a balanced way. And we reported that bill out of committee without a dissenting vote, dealt with a lot of challenging issues there. And so we seek to reauthorize the program in a balanced, bipartisan way. We thank the administrator for being here, for his testimony, for his leadership and his team's leadership to make sure that we take into account a changing climate and make sure that we take care of those in our society that are challenged to pay these bills. We want to make sure that we have a program that is current with the risks and balanced for the American people. So I want to thank this subcommittee for dealing with this in a thoughtful way. For a point of personal privilege, I want to acknowledge a longtime Financial Services Committee staffer, Ed Scala, who's worked on this committee longer than I've been a member of Congress. And for the first time, his mother is here. And so, Beatrice, Bonnie, Ed's sister, and his niece, Alexa, thank you for being here. Thank you for keeping tabs on Ed. He is sharpened up this day because you're here, and we're grateful for that. But I'm very grateful for his advice, his counsel. He is a key member, a longtime key member of the Financial Service Committee, who works with Democrat staff and Republican staff so very well, and I count on Ed's counsel every day. So thank you. With that, I yield back.
Chairman yields back. The chairman now recognizes the ranking member of the full committee, Ms. Waters, for 1 minute.
Thank you very much, Mr. Davidson. I appreciate this hearing today. Congress designed the NFIP to be self-funded through annual insurance premiums collected from policyholders. Currently, the NFIP is drowning in $20.5 billion in debt, with $1 million in interest accruing every single day. And I am just wondering what effect it would have if Congress simply enacts a clean reauthorization of the NFIP and maintains the status quo for the program and its debt. I'm not going to raise that question now, but I'm anxious to hear what is going to be said today. I want Mr. Maurstad to explain to us how he is going to carry out the function of NFIP. I want him to talk about money. I want him to talk about debt. And I want to get down to some real answers today. So with that, I yield back the balance of my time.
Ranking member yields back. Today, we welcome the testimony of Mr. David Maurstad. Mr. Maurstad is FEMA's Assistant Administrator of the Federal Insurance Directorate and the Senior Executive of the National Flood Insurance Program. He has over 25 years of experience in both public service and insurance. Mr. Maurstad received his Master of Business Administration from the University of Nebraska. We thank you for taking time to be here. You will be recognized for 5 minutes to give an oral presentation of your testimony. And without objection, your written statements will be made part of the record. Mr. Maurstad, you are now recognized for 5 minutes to give your oral remarks.
Good morning, Chairman Davidson, Ranking Member Cleaver, Chairman McHenry, Ms. Waters, members of the subcommittee. Thank you for the opportunity to testify today regarding FEMA's perspective for the reauthorization and reform of the National Flood Insurance Program. For more than 50 years, the NFIP has been critical to the nation's resilience policy. Today, as our changing climate poses a serious threat to our nation, and as the number and severity of disasters continues to grow, the NFIP requires meaningful structural change. Since the NFIP's last multi-year reauthorization in 2017, the NFIP has experienced 25 short-term extensions and 3 brief lapses. The short-term extensions are disruptive and cause existing and potential policyholders to lose confidence in the NFIP. We believe that a 10-year reauthorization with comprehensive program reforms is vital. We propose 17 recommendations to reform the NFIP that are guided by 4 key principles. First, ensuring that more Americans are covered by flood insurance by making insurance more affordable to low and moderate income policyholders. Flood insurance is unaffordable for some policyholders. Under current law, FEMA does not have the authority to establish and charge premiums based on a policyholder's ability to pay. Although the NFIP offers mandatory discounts and cross-subsidies, these discounts and subsidies do not take into consideration the policyholder's financial need and, in fact, can make risk communication difficult because people may equate lower cost with lower risk. Reforms that address affordability, such as the use of a targeted assistance program, can offer low and moderate income current and prospective NFIP policyholders a graduated risk premium discount while providing them with the knowledge of the full risk to communicate a property's true flood risk. Second, communicating risk is real time, providing Americans with tools to manage flood risk. reforms that increase the scale and frequency of flood mapping and incorporate emerging priorities and technologies into flood hazard and flood risk identification process will expand the ways in which NFIP communicates risk. Raising an awareness of true flood risk enables people to make informed decisions about their family and property. Home buyers and renters may lack awareness about flood risk when they complete real estate transactions. Reforms that would require states to establish minimum flood risk reporting requirements for sellers and lessors before residential transactions close would address this challenge. Additionally, we need to reform how we measure and communicate flood risk. The nation's evolving risks require flood hazard information that is more robust than the special flood hazard area and 1% annual chance flood elevation. Third, reducing risk by addressing extreme repetitive loss properties. Previous losses are a significant indicator of risk, meaning that if a property flooded before, there is a high likelihood it will flood again. Since 1978, 350,000 structures have had 2 or more paid losses. Nearly 3,000 have suffered 10 or more losses. The NFIP must have better tools to address insured structures that have experienced multiple flood claims. Almost 3% of insured properties are considered unmitigated repetitive loss properties. Reforming the NFIP to institute an objective threshold to deny coverage to the most flood-prone structures would discourage unmitigated rebuilding in areas with a history of flooding and reduce risk, financial risk, to the NFIP while ensuring coverage is still widely available to individuals, families, and businesses who might not be eligible for private market coverage. Fourth, instituting a sound and transparent financial framework that allows the NFIP to balance affordability and fiscal soundness. Without this in place, the longevity and sustainability of the program is at risk. The NFIP currently carries $20.5 billion in debt to the U.S. Treasury and anticipates paying approximately $619 million in interest in FY23. As currently structured, the program is burdened with interest expense and unable to pay this debt back in full. Canceling the NFIP's debt provides the program with a solid foundation that can support financial reforms around borrowing, future interest, enhanced liquidity, and an upper limit for the size of an NFIP event. These reforms address fundamental structural challenges and are essential to building a viable, sustainable NFIP the nation needs and deserves. It is critical that Congress provides urgently needed multi-year reauthorization and concurrently reform the NFIP. We look forward to working with Congress to develop a long-term solution that addresses the needs of the NFIP, its policyholders, and the nation. I'm pleased to answer any questions.
Thank you, Mr. Maurstad. We now turn to member questions. I recognize myself for 5 minutes for questions. Thanks for addressing the need for reform. For 15 years now, the Government Accounting Office has consistently labeled NFIP as, quote, high-risk program, calling it out for several things, including premium rates that do not reflect the full risk loss, transferring some of the financial burden of flood risks from individual property owners to taxpayers, and a lack of transparency that leads to, quote, leads some to, quote, mistakenly perceive that they are not at risk of flood loss. Unresolved affordability issues, which you address for many policyholders, all that seems like a pretty grim picture with the job that you've walked into. Can you paint for us a picture of what the program's future looks like if we don't reform NFIP, and how critical is it that we bring this 50-year-old program into the 21st century with modern tools and techniques?
Yes, sir. Thank you very much. So first of all, it starts with the financial structure of the program. And as has already been mentioned a number of times, being saddled with the interest costs that provides no real benefit to the program is harmful. If we look at the proposed recommendations that we've provided that include development of a sound financial framework, if we do nothing there's a 2% chance that at the end of 10 years, the National Flood Insurance Fund will have dollars more than what they started. If we enact all of the proposals that we've put forward, there's an 81% chance, an 81% chance, not 2, 81% chance that the fund will have more resources at the end of that 10 years. So structurally, as we look at the NFIP as a multi-pronged program of floodplain management, of flood risk grants and flood risk identification, and the insurance, having that sound financial framework is critical for the sustainability of the program.
Yep, thank you for that, and I applaud you, frankly, for the progress you've made on IT infrastructure for the program as well. One of the things that comes up often is mapping. So how can homeowners appeal or challenge a zoning determination? I know that under Risk Rating 2.0, flood zones are no longer a rating element for NFIP rates, but they are important for the application of mandatory purchase requirement for properties under the Flood Disaster Protection Act of 1973, as well as determine eligibility for some policyholder discounts like the newly mapped status, so on and so forth. Can you describe what the NFIP's current mapping appeals process is for homeowners under Risk Rating 2.0 and how that interacts with the appeals process, and I guess maybe how that is distinct from the mandatory purchase requirement?
So the investment of probably over $5 billion in the 22,400 communities flood maps across the country is vital as we continue to look at how we can best identify flood risk. They're for two primary purposes. As you indicated, one, to outline the special flood hazard area, the high-risk area, where communities then agree in participating with the program to regulate construction in that area. And the second is the mandatory purchase requirement. Dealing with the first, it's a local ordinance. So to start with, you can look to the local government to make sure that your property is accurately reflected in the local community's flood insurance rate MAC. Beyond that, we have two ways. You can go directly to FEMA for a flood map amendment, and then there's also a second. So we encourage policyholders to work with their agents, to work with their community leaders, and regional staff that are there to be helpful also. If there's a question about their flood zoning, to come to FEMA and we will help address that.
Yeah, thank you. When it relates to mandatory purchase, I think in particular it'd be good to have a path where if the lender for a property doesn't necessarily agree that this is in a flood zone, if you can establish with surveys and whatnot that this is clearly not in a flood zone, that we let the underwriter take the risk and then say, all right, you guys are astute folks. You've chosen and proven that it's not in a flood zone. You could decide. I think just for the record, you might not know it off the top of your head. You look repeat losses. What's the record holder? The number of times we've rebuilt or paid for the same property. I've heard reports as high as 30, 35. Do you know the record off the top of your head?
I do not. I know that it's way too high.
Could you get that back to us? The record holder.
Yeah, I will.
Thank you. My time has expired. I now recognize the ranking member, Mr. Cleaver from Missouri, for his questions.
Thank you very much, Mr. Chairman. Katrina, I want to go back to that just for a minute because some of the things we saw. Senator Trent Lott's house was wiped away, nothing left. Congressman Gene Taylor's house was wiped away. The front stoop was still there, gone. Now, even though we had some initial problems, eventually they were taken care of. But the majority of the victims were poor in Mississippi, in and around Biloxi, and in New Orleans. And so while renters do qualify to purchase NFIP coverage and are often affected by flood disasters, they are less likely to have flood insurance. The people in New Orleans, we had public housing decimated in New Orleans. And at the time, we only had one-for-one, well, we still do, one-for-one replacement. So we could only replace the units that were just awful. But the poorest people in the country suffer the most when these disasters hit. Mr. Administrator, can you just discuss what we know about the renters' relationships with private flood insurance and what may be some answer to this issue?
Yes, sir. Thank you for that question. And I recall the devastation associated with Katrina very well, as I was leading the National Flood Insurance Program at that time also. And it really exposed a number of the faults associated with the program that we need to continue to work on and address. And certainly, there's no question that with discriminatory land practices of the past, that many less fortunate Americans live in the high-risk areas for flood in communities across the country, which is really why the affordability proposal that we've included in our recommendations is important for the committee to consider. Being able to help those individuals have the financial resources they need after a flooding event is critical, because they're the ones that have the most difficulty in recovering. We've seen that time and time again.
Thank you very much. The private market, we know that a defining characteristic between the NFIP and the private market is that the federal government cannot deny consumers who apply for coverage through the NFIP. Yet the private market often can, unless it is based in some kind of discrimination. In fact, we have heard from homeowners in Houston, Texas, when the water comes out of the bayous around Flat, Houston, Texas, they were dropped by their private insurers following Hurricane Harvey. While some had the means and desire to still purchase new flood coverage after being dropped, many share that they were denied coverage by the private market. Can you expand on the market trends and what role the NFIP might play here?
Well, there's a couple of points I'd like to make, sir. One is we need more property owners, renters, small businesses to have flood insurance coverage. There's a huge flood insurance gap that needs to be filled. The NFIP is working to do that, but we also need the private sector when they're to also increase their efforts to try to make sure that property owners have the coverage that they need. And as you've pointed out, especially renters, because we know very few renters recognize the flood risk they have. So we're working with our agents to make sure that we also have a focus on not just the dwelling, but also those that rent. So it's a very serious problem. One of the provisions in our recommendation is to let a policyholder that leaves the National Flood Insurance Program and tests the private market, if they want to come back to the program, that we bring them back into the program in the same position that they were in when they left the program. So if they were on a glide path to their full risk rate, they would enter the program back in the same place on that glide path as when they left.
Thank you. My time has run out. I am really interested in the whole issue of reinsurance and how it impacts the industry. And you and I have had some conversation about this already. I yield back, Mr. Chair.
Thank you. The gentleman from Wisconsin, Mr. Fitzgerald, is now recognized for 5 minutes.
Thank you, Mr. Chair. In late July 2022, FEMA released a concerning draft proposal called Direct to Customer. In its release, FEMA noted that it's imperative that FEMA enable the digital sale and servicing of flood insurance to increase the number of people covered. FEMA noted that this is a long-term project and stressed that they are in early stages of looking at the concept. In this digital age, there's often a rush to cut corners under the erroneous notion that an automated process can replace human interaction and expertise. Any kind of proposal that undercuts the valuable and trusted role of the independent insurance agents and the brokers and their role in how this plays out could have a negative impact on increasing flood insurance participation rates. We talked a little bit about this already this morning. We saw a similar dynamic play out in the EIDL loans offered directly by SBA during the pandemic. A perfect example, which had much higher incident of fraud than the PPP loans, which were issued through financial institutions. We've heard a lot of concerns about the direct-to-customer approach to distributing flood insurance that ultimately would not reach customers that NFIP or agents are not already reaching. And the agents, which we heard from last month, continue to play a role in these servicing plans. It's unlikely a call center would offer this same kind of perspective. To me, it sounds like a mess. So my question to you is, what's your take on the status of FEMA's exploration of offering direct-to-customer, direct-to-consumer flood insurance plans?
Thank you very much for that question. My first response to be that we're being very careful and very deliberate about our exploration of whether it makes sense for the National Flood Insurance Program to entertain the thought of developing a direct-to-customer program. As an agent for 2 decades, I fully understand the value associated with agents. And at this point in time, and as we continue our exploration, there's no intent to not have agents involved in our direct-to-customer program. And so we vitally rely on the insurance agents to be able to accurately and helpfully provide the information that their customers need to analyze their flood risk and then have an insurance coverage that they need so much after a flood event.
Yeah, bear with me too on this question, but just kind of following up on a proposed direct-to-customer online sales, I just wanted to prove that point. But I mean, the data that is required, simple stuff, but the foundation type, the presence and number of flood openings, depending on the foundation type, data construction, existence and identification of any substantial improvements, construction type, flood-proofing status, eligibility for machinery and equipment elevation discount, square footage, number of floors, building replacement costs. I mean, these are all the things that a agent hands-on would take a look at. Am I correct? I mean, this is not just a simple formula in which you say, plug in this number, and here's how much you're going to get, right?
Yeah, absolutely. You're not going to get any argument from me on the importance of the agent in this in the process. And again, I would emphasize that we are in the exploration phase of looking at this, but we do feel it's our responsibility today to look at every way in which we can potentially close the insurance gap that the country faces. If we're going to have a modern NFIP that meets the needs of the customers where we are, we at least have to have the answer as to why we do not have direct-to-customer.
Thank you very much. I'd just say, Chairman, I think this is one of the concerns, is this can definitely be oversimplified, especially in some of the hearings that we've had here in Congress. I yield back.
The gentleman yields. The chair now recognizes the ranking member of the full committee, the gentlewoman from California, Ms. Waters.
Thank you very much. I'm from California, and we've been suffering recently with both fires and flood. And so for a couple of years, we had drought, and then because of climate change, which is denied by some people, it rained, I think, for three weeks or more every day. And so we have some real problems. And now we've really got to figure out what to do. Not only are we having these problems in California, I was recently in Florida, and I saw people who had gotten a little bit of money from FEMA that won't even begin to restore their homes, et cetera, et cetera. And so let me just ask you about Congress has designed the NFIP again to be self-funded through annual insurance premiums collected from policyholders. Currently, the NFIP is drowning in $20.5 billion in debt. Who do you owe debt to?
We owe debt to the federal treasury, ma'am.
To the government?
Yes, to the government.
Are you part of the government?
We are.
So the government wants you to repay the government this debt, is that right?
That's our obligation.
Oh, that doesn't make good sense. The NFIP is drowning in $20.5 billion in debt with $1 million in interest accruing every single day. Again, what effect would it have if Congress simply enacts a clean reauthorization of the NFIP and maintains the status quo for the program and its debt?
Thank you. The cancellation of the debt is one of the recommendations that's one of the 17 recommendations that we've put forward, and is the basis for which we can start to begin a sound financial framework for the program that is understandable, transparent, and predictable. So it's vitally important that we have the debt canceled, that we don't have the burden of the interest costs that you mentioned that are only going up in this high interest environment. So it's a key part of the recommendations that we've put forward.
So, in addition to your basic responsibility, you can't even get to mitigation and helping locals with mitigation measures and other kinds of things that would help when these floods come. And so, have you made it known to everybody and both sides of the aisle understand that we need debt cancellation?
Yes, I mean, we've been very clear how important that is, and we also do want to, however, thank Congress and the administration for the unprecedented amount of dollars that have been provided to FEMA for our mitigation programs, whether that be our building infrastructure and community program, whether that would be our flood mitigation assistance grant program. We do have more mitigation dollars available than we have before. We still a long ways from meeting the entire need, but it's definitely progress, and we're looking at making sure that all parts of the community, socially disadvantaged, vulnerable communities, are also a part of these new grant proposals that are unfolding.
So, since I've worked on flood insurance for a long time, would you describe the competition in the United States from various areas putting pressure on you to say, you know, my area is more important than their area. I need more up here than they need. Would you describe to them the kind of competition that you're confronted with where people are desperate for help that you cannot provide?
Well, there isn't any certain that any question that members are most concerned about their own constituents, and that's who we hear from a lot. But I would say that all across the country, we work with, through our regions, worth the states to identify the risky areas in their communities that would be able to have access to our mitigation funding. So we run a national program. We're sensitive to all parts of the country, and we're, I think, doing a good job of making sure that we don't leave anybody behind.
You're doing the best job that you can possibly do, but I want you today to let these people know they can leave us fighting with each other about what's needed on the East Coast as opposed to what's needed in the South, and on and on and on, or we can cancel this debt and do something about flood insurance. That's all I want you to do.
There's no question that the competition for mitigation funds is steep. We generally are 3 to 4 times oversubscribed when we have our grant process. So there's a great need for mitigation across the country.
Gentlewoman yields back. Next, we have the gentlewoman from Texas, Ms. De La Cruz, for 5 minutes.
Thank you, Mr. Chairman, for holding this important hearing today, and thank you, Assistant Administrator Maurstad, for taking the time to appear before Congress. As the chairman mentioned, this is the first time that a FEMA official has appeared before this committee in over 6 years. It is time for Congress to assert its role in reforming the National Flood Insurance Program in order to ensure its long-term solvency after years of short-term funding extension and minimal oversight from this body. As the vice chairwoman of this subcommittee, I look forward to working with Chairman Davidson along with my colleagues here to ensure that NFIP is best serving the American taxpayers and sustainable for the long term. With that in mind, what steps has FEMA taken to improve its efficiency and effectiveness of the NFIP's administration, and how can the program be reformed to better serve its policyholders and taxpayers?
So I would say that the answer to that is in the 17 recommendations that we've provided. There were nearly 100 subject matter experts that worked on the development of the recommendations, and thousands of hours put into what the program experts believe need to happen to make sure that we have a NFIP that's sustainable into the future. So we're looking at what do we need to do from a pricing perspective to make sure that we're fairly and accurately identifying the risk and charging the right premium for it. We're in the process of developing new policy forms, our product, so to speak, so that we can better serve our policyholders, and improving the distribution of the program through a simpler method by which agents can write business with the NFIP.
And with that being said, I have insurance experience for over 20 years. I owned my own agency for those 20 years, and NFIP is something very near and dear to my heart. I have one of the poorest counties in the entire nation, Hidalgo County, that is really dependent on NFIP and the benefits that it provides to the customers. So when we talk about reform to better serve the policyholders, I think about how we can distribute this product and get more consumers involved. As an agent myself, I can tell you what is burdensome. What is burdensome is that we have to use, number one, our agency platform in order to sell homeowners coverage, and then we have to go to a completely different platform in order to actually sell the flood insurance product. And so that takes time. It takes more education and learning a whole new platform. How can we solve the efficiency in the agency program to make it easier for an agent to be able to sell the product?
As I mentioned earlier, I was an agent for a couple of decades also, and certainly understand the concerns that you raised, which was one of the drivers behind why we developed a new rating engine and have replaced the old manual that was twice the size of the binder that I have in front of me, that took many hours to be able to write a policy. And so with our new rating engine, you can answer roughly a dozen questions and have the premium, it's $817 for this particular property. So we've really streamlined the whole application process and the ability for agents to more effectively market and sell our product.
With that, I yield back.
Gentlewoman yields back. Next, we will go to the gentlewoman from New York, Ms. Velasquez.
Thank you. Administrator Maurstad, I have long called for a 10-year reauthorization of NFIP, and I believe that it is important so that it provides sufficient time for Congress, FEMA, and the WIOs to evaluate the programs and consider the type of reforms that are needed to make it more stable. But wouldn't you also agree that it is hard to consider reforms or have hearings like this when you are working on their short-term reauthorization windows and constantly worried about the programs lapsing?
So the short answer is yes, which is why one of our recommendations is, in fact, to reauthorize the program for 10 years and provide that stability that the program needs and our communities and our policyholders deserve.
I represent New York, and in New York, multifamily housing is central to the housing stock. To date, FEMA data on risk rating 2.0 has focused exclusively on its impact on the single-family residential market. Where multifamily and commercial properties are included, they are combined with single-family and do not shed full light on the risk these buildings may face. Is FEMA planning to separate data on multifamily and commercial properties from data on single-family structures so that owners of these properties might fully understand the risk?
So I think you raise certainly an interesting concern, one that I will take back. We, of course, are looking at ways that we can best understand what the impacts of our program have on whether it's renters, single-family homeowners, or multifamily. We're looking at ways that we can now capture the data with our improved information technology system. And so I'll definitely take that back and have more conversation with you on
Please
exactly
do so.
what you're looking for.
This is an issue that I've been raising every time we have held hearings on flood insurance. While they seem small when compared to single-family homes, in the NFIP risk pool, commercial and multi-policies must pay significant amounts into the NFIP overall. Can you give us a sense of how much these properties are receiving on the claim side in an average year? Are they a financial drag or a benefit on the program?
Yeah, certainly don't have that information right with me. We can get that information for you and provide it to you.
Thank you.
Yes, ma'am.
According to the Puerto Rico Planning Board, we're talking now U.S. territories, 200,000 residences on the island are located in flood-prone areas. Yet, according to FEMA's data, as of February 2023, only 4,368 units have active NFIP policies. What actions is FEMA taking to ensure that more homeowners and renters in Puerto Rico are covered by NFIP policies in light of what we witnessed after Maria?
Yeah, so no, very much a question, very much an issue, very much a concern to the program. I've actually met with the insurance commissioner of Puerto Rico when I was down there, working with him on what we can do to increase the number of property owners that have a flood insurance protection, and we'll keep working on that because, as I've said, seeing homeowners, renters that don't have coverage in neighborhoods that I visited after events, it's tragic. Their lives are completely disrupted and turned over. So we need to do what we can to make sure they have their coverage. I believe the affordability proposal that we've included in our recommendations would be helpful.
You need to be more proactive in that sense. Lack of awareness and information is an issue here. Thank you.
Gentlewoman yields back. Next, we will turn to the gentleman from Florida, Mr. Posey.
Thank you, Mr. Chairman. Mr. Maurstad, how much has the flood insurance program spent on maps?
I'll get you the exact figure, but it's upwards of a $5 billion investment.
$5 billion investment.
Yes, sir.
Does that include recent years?
I'll get you the exact figure and the amount over the by year, but that's cumulative. The last few years, roughly speaking, it's been about $600 million.
what is the most times the flood insurance program has paid for a total loss or maximum policy limits on one single insured property?
The number of times? I don't have the exact number. The question came earlier. I'll certainly get it. I know that, as I indicated in my opening remarks, there are hundreds of properties that have had more than 10 losses.
Well, we've heard numbers as high as 16 times they've paid for a single total loss. We even heard one time, I heard one time they paid 30 times for a total loss of property, which is absolute, complete insanity, in my opinion.
Sir, right now we don't have the authority or the ability to not provide coverage to someone that's in a participating community. So that's why we put forward in our recommendations a multi-loss provision that would address the problem that you've raised.
Yeah, I would think once you pay for total loss, you say, okay, this is off the map. We're not going to insure this property again, much less more than 10 times, thousands of properties perhaps. Last fall, one news source said the Administrator Criswell called the FEMA flood maps useless. Could you explain real briefly what he meant by that?
I'm not familiar with that remark. I know in my conversations with Administrator Criswell, she is supportive of the mapping program that we have, recognizing, as we've put forward in our recommendations, that we can do more than we're doing now to identify risk outside the high-risk area through non-regulatory products. And so I believe that the administrator, without doubt, sees the value associated with the flood insurance rate maps in the 22,400 communities across the country.
Yeah, well, when I was first elected, that was 14 years ago, they said to properly evaluate risk, they needed new maps. It would cost $500 million, and then it'd take 3 to 5 years to evaluate the maps. You know, and I've suggested, I've passed amendments here a couple times saying, how about you just use DOD, Homeland Security, or NOAA maps? You know, they have a current topo in every inch of this country. There's no need to go outside to pay for more maps to be developed. The Association of State Floodplain Managers estimated that the price to consistently update flood maps would range from $107 million to $480 million annually. Director Criswell has said that the current policy fee for mapping would have to be raised to a level that could threaten affordability and discourage insurance. Could you care to comment on that?
Again, I think that the investment, of course, in our flood maps, whether it's from the policyholder fee or whether it's from the appropriated amount from Congress, are important to make sure that our maps accurately reflect the 1 in 100% chance event in the communities across the country.
You know, why does FEMA continue to resist making all the data, the methods and models that they use to calculations and how they calculate it under Risk Rate 2.0 completely and fully transparent?
Sir, I believe we've provided all the information that we've been requested to provide. We've been very transparent. We've provided the entire methodology for the development of the actuarially sound pricing model that we now use. If there's additional information that you would be helpful to you, we'll certainly do our best to provide it for you.
How can policyholders appeal their premiums under 2.0?
Well, they work with their agent the same way that they work with their premiums on the other insurance that they have with the agent. If they think that the information that's gone into developing their premium for their particular property is inaccurate, then they can work with their insurance agent to correct that and make sure that the premium that they're being charged reflects the risk of their property.
Gentleman's time has expired. Next, we will go to the gentlewoman from Michigan, Ms. Tlaib.
Thank you so much, Mr. Chair. If I may, I would like to submit an article, New York Times article, a broken flood insurance program, into the record.
Without objection.
Thank you so much. Thank you so much for being here. As you know, I come from an incredibly, very strong community, the city of Detroit, that we birthed movements on a number of things that I think, kind of change trajectory for our whole country, not just in the automotive industry and music and everything, but even now, I talked to our chair of our committee about the fact that many of our families farther away from bodies of water are now impacted in a very significant way from flooding. We're seeing that more and more. In my district, I was shocked to see like my family's 4 times within one summer, I think between June and July. The community of the city of Dearborn, huge amounts of flooding. In Inkster, I met a senior citizen whose basement, didn't get any coverage or anything. She still is dealing with mold, and she's in her 70s. All of this. So I started looking and researching, well, what's the process of getting flood insurance? Of course, mapping continues to come up. But say, for instance, Mrs. Smith from Inkster, or from Aviation Sub in Detroit, or from Dearborn, picks up the phone and says, I want to get flood insurance. By the way, the average home insurance in Detroit specifically is like $3,700. The majority of homes in my communities that I mentioned are less than $100,000. This is working class families. She picks up the phone, she wants insurance, you go to the list or whatever. It comes back incredibly unaffordable, right? We talked about this. What is she supposed to do at that point? Because when she went to the FEMA site, they said, sorry, first, they don't clean out basements. I don't understand that unless there's like a room or somebody sleeps down there. It's this whole process they go through. And then, even though she brought her pictures, she showed me her receipts of all the things, there was no sense of how she could even get covered. I don't know what we're supposed to do when the national program, to me, doesn't include all of Americans that are impacted by flooding right now. And even when I talked to Chair McHenry, we talked about this. I don't know, you tell me, Administrator, out of the close to 5 million that can afford this, what is their income? What is the worth of their homes? Is it the $1 million homes that get access to the flood insurance? I want to know, because the families in my community are not able to access this in an equitable way, and I don't know how we change this, because I know we're just going to renew this and not make any changes. That's exactly what's going to happen. I saw it happen over and over again.
So the affordability problem has been one that's been around for a while, and in fact, Congress recognized in the 2012 reauthorization that as discounts and subsidies were going to move away, that affordability was going to be more of an issue. And so you charged FEMA with developing an affordability framework, which we provided to Congress in 2018, which is the basis for the proposal that we've put forward to develop a means-tested premium assistance affordability program. But the report tells us that about 25% of the individual policyholders in the high-risk area are low income. Mm-hmm. It also tells us that 50% of the property owners in the high-risk area, 50% are low income. So it's abundantly clear, and I understand how difficult it is to have those kind of conversations with people that need the coverage so bad and have had losses. But it has the information that we need to provide assistance through our affordability proposal. And so appreciate the committee's attention to that recommendation.
So, I leave with this. One of the things, and I agree with Congresswoman Velasquez about the lack of access of information in regards to accessing the flood insurance. What I do notice, even when my folks do have some sort of insurance, I have to call, and I personally call, and I would recommend my colleagues to pick up the phone and use the power of your office to call these insurance companies that deny the claims. It infuriates me when I have to pick up the phone or use my letterhead to say, hey, here's all the things that my resident submitted. There's nothing you all can do in regards to some of what's happening there. My residents are paying into a system and they're not getting.
Yeah, no, there absolutely is something that we can do. And in fact, Congress also took steps to do something when we created the Office of the Flood Insurance Advocate for those that are having a difficult time working their way through the program, that they have that means. So in addition to your having to do what you indicated you do with your letterhead. Also, you can send them, point them to the Office of the Flood Insurance Advocate at FEMA to help them. But back to some of the earlier conversations.
Well, gentlewoman's time has expired. Maybe you could get that in writing. I will now turn to the gentleman from New York, Mr. Gabarino.
Thank you, Mr. Chairman. Superstorm Sandy was one of the biggest natural disasters in U.S. history. While it was technically no longer a hurricane by the time it reached the shores of Long Island, Sandy caused massive coastal flooding that reached the heights of 5 and 6 feet in places across my district. Given the risk of flooding along the South Shore of Long Island, my constituents are keenly aware of the need for affordable flood insurance. However, since Risk Rating 2.0's implementation, just under 4 million Americans have seen their premiums increase. In many instances, individual household rates have more than doubled since the launch of the new Risk Rating 2.0. Mr. Maurstad, you've gone on the record by saying it is both equitable and adaptable. You've also gone on to say that it corrects pricing inequities for close to 1 million policyholders living in low and moderate income communities. However, these comments seem to be in direct contrast with recent comments made by Secretary Mayorkas during his most recent appearance before the House Homeland Security Committee. To quote Secretary Mayorkas, he said, DHS is reviewing and needs to continue to review the Risk Rating 2.0 given the concerns that have been expressed. To me, it sounds as if the methodology for setting flood insurance premiums needs more tweaking than initially expected. From the outside looking in, there seems to be a clear disconnect between you and the Secretary on the effectiveness of Risk Rating 2.0. Is FEMA and/or DHS currently reviewing the methodology behind Risk Rating 2.0's determination of risk? And if so, can you provide an explanation of what is exactly is being reevaluated?
Yes, sir, thank you. So I actually have been in conversation with the Secretary's office, and there is they continue to be as supportive of Risk Rating 2.0 as when he issued a statement on April 1st of 2022 in support of the changes. The only report that I'm aware of underway, that the GAO is currently reviewing the Risk Rating 2.0, and we're cooperating fully with them. And I think that report will be coming out in the next couple of months.
Okay, well, I think you should check with the Secretary, because last week in front of the committee, he said DHS is reviewing and needs to continue to review Risk Rating 2.0. So what I've seen what happened with a lot of constituents and their policies under Risk Rating 2.0, I think it needs to be reviewed and possibly changed. So I think I understand what he said last year or in support of it, but what he said last week is different. So one comment I'll make before I move on to my next question is this is a topic I've been following closely since arriving to Congress, and I've actually been working closely with Leader Scalise on it, and I appreciate his leadership on the issue and hope that we all can work together to ensure that U.S. flood insurance market is stable and affordable for all Americans, and particularly those on a fixed income. And I want to ask, as a follow-up to my colleague's question, Mr. Prosy, he asked about, and I think your answer, you talked about how if something's wrong with the premiums, or if a homeowner thinks their premiums are too high, they can go to their agent and possibly get it fixed. I believe 93% of insurance policies, flood insurance policies, are written under NFIP, and that's said. So, and I also heard from my constituents, one thing that I keep hearing from is on Long Island, they've taken steps to mitigate flood, whether it's raising their house or other structural changes, but those changes are not reflected in their monthly premium. I asked one of the witnesses at our last hearing about whether there are clear financial benefits for policyholders who have implemented these mitigation features, and the answer that I received really just created more uncertainty. We were told that the challenges that agents have under Risk Rating 2.0 is, quote, black box rating engine, is the black box rating engine that is making it nearly impossible for agents and floodplain officials to provide specific guidance to consumers that want to both implement mitigation and know what their return on investment or monthly premium is going to be. So, Mr. Maurstad, I'll pose the same question to you that I did at the last hearing. Under Risk Rating 2.0, are there clear financial benefits for policyholders who have implemented these mitigation features as it uniquely pertains to the person's monthly premiums? If so, what do those benefits look like?
Yeah, certainly, there's no question that if policyholders take measures to mitigate their risk, either by elevation of their structure or by moving air conditioning equipment up off the floor, there is a credit for that, and it's very clear, and we can provide you some examples of that. We've had, again, back to the rating engine that I mentioned before, there's been over 100 million quotes provided through that rating engine. And so people are clearly looking at what the options are within risk rating 2.0.
I'm out of time.
Gentleman's time has expired. Next, we will go to the gentlewoman from Colorado, Ms. Pedersen.
Thank you, Mr. Chairman. I'm grateful that this committee is focused on a pathway forward to reauthorize the National Flood Insurance Program because this is absolutely critical in Colorado. My communities throughout my district experience heavy snowmelt or serious storms, which can lead potentially to damaging and dangerous floods. In recent years, the ongoing risk of catastrophic wildfires has only compounded the challenges that Coloradans are facing. We now see communities narrowly avoid immediate danger of a wildfire, only to find their homes susceptible to flood damage. As Coloradans recover from fire, we also are seeing communities where the ability to purchase wildfire insurance is not even an option. Similar to flood insurance, though, many homeowners don't even realize that their typical insurance policy does not cover these catastrophic events until disaster strikes. Improved transparency and clearer disclosures of flood and fire danger are necessary to better educate people about their potential risks when they're purchasing homes. And I do hope this committee also works on providing tangible support for homeowners who live in communities like mine who are susceptible to wildfires. The post-fire flooding can damage and harm communities for months and even years following a wildfire. How does FEMA's Flood After Fire campaign seek to work to educate homeowners about the potential coming threat of flooding in their aftermath of a wildfire? And are additional resources necessary to ensure that more people actually follow through and purchase flood insurance after a wildfire?
Yeah, so, I mean, there are many sources of flooding, and you've articulated a couple that a lot of folks don't think about. Certainly, flood after fire is a huge issue. The circumstances can actually, the ground actually takes more than 6 years sometimes for the ground to be able to be like it was before. So that flood risk is not only just that next season, but for about 5 or 6 seasons afterwards. And so yes, we did a flood after fire campaign in Colorado to try to help people understand what their flood risk is, doing similar in other parts of the country. And we're going to continue because it's vital. As one of the themes, of course, is we need to close the flood insurance gap. Only 4% of property owners in the country have flood insurance, and we need to do better than that. And so any help that we can provide you in that regard, we certainly want to provide.
Great, and then do you actually target it specifically to communities for your awareness campaign around potential flooding and the options for flood insurance to those communities that have been affected specifically, and do you do it after every wildfire, or how does that work?
Yeah, we don't do it after every wildfire, but we do work with state insurance commissioners, different state insurance organizations in those situations where we have a flood after fire. We do some targeted outreach, as we did in Colorado. We don't do it after every flood, after every wildfire.
It seems like that our offices could help support our constituents with information like that when, unfortunately, things like this are inevitable in communities like Colorado. Another question that I have is currently the flood-related disclosure requirements are set at the state level, and neither renters or homeowners may be aware of the flood risk of a particular property or the requirement to obtain and maintain flood insurance following a disaster assistance for previous floods. Do you think federally required flood disclosures would be a helpful tool for consumers, especially for renters, to understand their risk and the availability of fair and affordable flood insurance coverage through NFIP?
Absolutely do, and one of our 17 recommendations in fact, would create such a uniform standard throughout the states and territories.
Great, thank you so much. I yield back.
Gentlewoman yields back. We're jumping around here. We got members that are voting, but Mr. Horsford from Nevada will be next.
Thank you, Mr. Chairman. While I appreciate that we're continuing the important discussion around the National Flood Insurance Program and the importance of its reauthorization with a long-term reauthorization, I do have to say that I wish we were better using the time of this subcommittee to really focus on the pressing issues that our constituents really need us to address, including the housing affordability crisis that is crippling our country. At a time when sales volumes remain depressed, pending listings are down 23% from last year, and the average household spends 31% of their income on mortgage or rent, Congress needs to act. My constituents are struggling to find a way to put and maintain a roof over their head, and that should be the first concern for this subcommittee. I know under the leadership of the Democratic majority, that was the priority. So I want to know, where is the housing on our agenda? When are we going to have a hearing on housing affordability? We entered this Congress 4 months ago in the midst of a housing shortage, and it has only deepened since then. And while I understand that we have to cover a whole host of issues and topics, today's housing crisis is just simply too consequential for me to remain silent. We are nearly 14 million homes short of the aggregate demand, and this lack of supply is driving housing costs through the roof. I'm told stories, painful stories, from constituents in my district who are struggling to be able to afford rent or to buy a home. However, from what I've seen, there's only one approach coming from the other side, and that's to slash the federal housing budget, putting millions more of our people, our constituents, at risk of losing their homes and doing nothing to incentivize new constructions. This is a nationwide crisis, and again, I ask the majority on the other side of the aisle, where is the plan on housing? When will we have a hearing? This is the subcommittee on housing, so I would ask the majority, when will we have a hearing? I also want to ask the majority whether you will work with me on the bill that I've introduced on the Housing Oversight and Mitigation Exploitation Act, the HOME Act, to protect the limited supply of housing that we have and to protect everyday Nevadans from being exploited by out-of-state corporate speculators who are driving up the cost of housing. These massive corporations and investors have been outbidding my constituents everywhere we look. And far too often, the homes these non-occupant investors purchase will never resurface on the housing market. That's unconscionable. These homes should be going to the individuals who live in our communities, and instead they are taking off the market to pad the pockets of wealthy Wall Street hedge funds. While reports continue to come in that these corporate speculators predominantly target neighborhoods of color and single moms, my bill, the HOME Act, will give HUD the tools necessary to investigate these allegations. Not only will HUD be able to collect the necessary data on who these speculators are targeting, but it also gives HUD the tools necessary to ensure that we have a level playing field in the housing market. So I would encourage my colleagues on this committee to look at this bill, H.R. 702, so that we can advance serious policy on a serious issue. I'd also encourage everyone to come to my district and to hear from my constituents about the pain associated with the lack of affordable housing options. Actually, since this issue is so pressing in my district, I am bringing together the Tri-Caucus, the Black, Hispanic, and Asian American Pacific Islander Caucus, for a housing summit in my district on May 8th. We're working hard every day to address the issues that matter most to our communities, and if anyone wants to deliver real results for our communities, then I welcome you to join us in this work. This is the priority that this subcommittee and the full committee should be focused on. I would ask the majority to please make housing affordability the priority that it deserves. That is what this committee should be charged with while we reauthorize flood insurance for the next 10 years. With that, I yield back.
Gentleman's time has expired. Okay, we're going to make a change in the chair, and then we're going to go vote. Okay, we're going to have the committee recess, and then we will reconvene immediately once we have members in place. So, brief recess.
The committee will come to order. There we go. Take two. Thank you, Mr. Maurstad, for being here today. I will now recognize myself for 5 minutes for the purposes of questioning the witness. Flood insurance is an issue that has an important impact on my district in Indiana. While we're firmly in America's heartland and have no risk of flooding from hurricanes, much of Indiana's 9th district sits along the Ohio River, running from Aurora in Dearborn County to New Albany and in Floyd County, and along the river in Harrison County. Indiana's 9th district is also home to many creeks, ponds, lakes, each of which can have a flooding impact on properties, businesses, and homes during times of heavy rainfall, causing property damage and sometimes death. Just last September, I was on the ground with the Indiana Department of Homeland Security for flooding that occurred in Switzerland, Jefferson, and Ohio counties in my district. Several years ago, I worked for U.S. Senator Dan Coates and worked with stakeholders during the last map update. I want to say first, I really appreciate the work of FEMA. Also, when I was working for Senator Coates, I was on the ground for the tornado that hit Henryville, Indiana, and worked with FEMA for about 6 months, and they provided excellent service during that time, so thank you. Many Hoosiers face the threat of flooding. The vast majority of properties in Indiana lack flood insurance coverage. Approximately 2.5 million properties currently don't have NFIP coverage. The number of homes and businesses covered has also dropped in recent years. In March 2021, there were 20,100 NFIP policies in place in Indiana. As of last October, there were less than 17,400 policies, a drop of more than 13%, or over 2,700 policies from just a year and a half prior. One reason why Indiana has been dropping NFIP policies is due to cost. Between 1978 and 2017, Hoosiers paid over $440 million in NFIP premiums, while they received less than $290 million back. So they paid $150 million more than they received. With inflation forcing Americans to tighten their belts, their wallets, many can't afford to pay these high premiums, which in Indiana, as of 2018, averaged $993. It's not a unique issue to Indiana, and I have recently said that I appreciate that we're looking at a modernization of the flood insurance program, because if it's not working in Louisiana and it's not working in Indiana, we probably need to find a way to fix some of these issues. So my question is, while the implementation of Risk Rating 2.0 reflects an attempt to more accurately measure risk within the NFIP, Congress will still need to work further on NFIP reforms to maximize the efficiency and the potential of the program. It's likely that NFIP will never be able to provide protection against all floods and flood risk nationwide by itself. Do you support efforts to encourage more private insurers to enter the flood market to help lighten the load risk for NFIP?
Sure. Well, first of all, the area in Indiana you described sounds a lot like my home in southeast Nebraska. So I certainly understand what you're talking about. When the National Flood Insurance Program began, the first in-government reinsurance program, part of the thinking there was it would allow the private insurance industry to better understand flood risk, so that there could be more companies on the private side enter in and help us close the flood insurance gap. And so one of the provisions, as I mentioned earlier in our recommendations, is to let concurrent coverage come back, somebody that leaves to come back. We think that will be certainly helpful. I think the other reforms that we're making also make it are beneficial for the private sector that many times mirror how the NFIP handles flood.
Thank you. I know Indiana isn't unique to this issue. Americans across the country face a risk of flooding. I look forward to working on meaningful solutions to address this. Thank you. I yield back. The gentlewoman from Georgia, Ms. Williams, is now recognized for 5 minutes.
Thank you. We are in the middle of a housing crisis, and I have constituents who can't afford their mortgage or rent payments. But today, we're going to have another hearing on flood insurance for the second time in 2 months, instead of discussing how we can lower housing costs in our districts and across the country. In the fourth quarter of 2022, rent in the Atlanta metro area increased by 6.4% compared to the fourth quarter of 2021. Since we have yet to focus any of our time in the subcommittee on housing, community development, and insurance, figuring out how to increase the supply of affordable housing or drive down home prices for our constituents, I'm happy to have this conversation again today about the needed reforms to the National Flood Insurance Program that would help those who manage to buy a house or rent an apartment keep their home should it flood. Atlanta is the city with the largest racial wealth gap in the country. And as I mentioned, Atlantans face skyrocketing housing costs. In Georgia's 5th Congressional District, people who need flood insurance might not be able to afford it. But if their home floods, like so many did in the catastrophic flooding in 2009, which caused $500 million worth of damage, they simply can't afford to not have it. Mr. Maurstad, I'm very supportive of the administration's recommendation to create a means-tested assistance program that will help low and moderate income families afford flood insurance by offering a graduated discount benefit. Has FEMA fleshed out what the particulars of this program could be? For example, what the discount percentages or the amounts would look like, and how much money people could save?
So thank you for your support and for the question. To date, we have not actually developed the program. What we've outlined is a framework for the direction that we believe the program should be instructed to go by Congress in developing this affordability framework. So the details, we've not.
Still working on it.
Still working on it.
Well, in our March 10th hearing, I asked one of our witnesses about legislative solutions for addressing the racial disparities people of color face. Communities of color are more likely to be more susceptible to flooding, but not designated to special flood hazard areas. Additionally, the Urban Institute found that people of color are less likely to have flood insurance, and if they do have insurance, experience a higher rate of unpaid claims. Is the NFIP aware of and proactively collecting data on these disparities?
So there's no question that we need, that what you described should not occur. We are working at making sure that all of our programs are based in equity. It's a priority of the administration. As I mentioned, answering an earlier question, as we look at how we can provide the data that is necessary for you to make policy decisions, if you have suggestions for us, we'll take those and we'll try to do a better job of providing the data that would be helpful. So not specifically, I'd like to get back to you and work on exactly what information that you're looking for to see if we can deliver.
I would love to hear more on the data collection, and also, are there any additional steps that NFIP can take to reduce these disparities, and do you have any thoughts on what they are?
I mean, we're working with our adjusters to make sure that they understand unconscious bias and that they make sure they treat every policyholder fairly. That's critical. When I talk with adjusters, I suggest to them that they should handle that claim as though it was my mother's claim, because if it's not handled well and comes onto my desk, we're going to have a discussion about it. And that goes also for making sure we treat everyone fairly. So if there are circumstances where that's not happening, I want to know about it, because we'll correct it.
Thank you. And last Congress, we took steps to improve stormwater infrastructure, a vital step in protecting our most marginalized communities and addressing the threat posed by more frequent extreme weather events caused by climate change. While much more needs to be done, this is an important step in the mitigation. Since mitigation efforts are included in risk assessment, how have these efforts affected rates?
Well, they're affected in a couple of different ways. One, as they are reflected in the community's flood insurance rate maps, they're reflected there. As they're picked up in the CAT modeling and the experience of the catastrophe modelers, when mitigation activities occur, those benefits are a part of the catastrophe models. So we're looking at making sure that mitigation efforts are and continue to be recognized in the program, because when we talk about what property owners need, we talk about the need for insurance, and we talk about the need for mitigation. It's a two-pronged approach that we need to take.
Thank you, and my time has expired, and I yield back.
Thank you, Ms. Williams. The gentleman from New York, Mr. Lawler, is now recognized for 5 minutes.
Thank you, Madam Chair. Thank you, Mr. Maurstad, for being here today and addressing our questions and concerns. As you mentioned in your opening statement, my district, like many across the nation, have seen more frequent and intense flood events occurring in recent years, and this is likely to continue. These are threats that will cost American homeowners, renters, and businesses billions of dollars in the near future. It's an important topic. Despite that fact, this hearing will mark the first appearance by FEMA before this committee in over 6 years, going back to March of 2017. So I want to commend Chairman Davidson for having this hearing and making an effort to restore the committee's oversight of the NFIP program and see that these important issues are being examined. Mr. Maurstad, the Government Accountability Office has observed that the NFIP has two competing goals: keeping flood insurance affordable and keeping the program fiscally solvent. The balance between these two goals would appear to be especially difficult at the moment. While inflation is at a 41-year high and Americans are dealing with an affordability crisis, the implementation of Risk Rating 2.0 has led to increases in premiums for millions of Americans. We have heard reports of premiums in New York nearly doubling, increasing from $1,184 to $2,197 on average. When contemplating those two objectives, how does FEMA attempt to strike a balance between them?
So first of all, thank you for the question, and certainly there are competing interests within the program that we are working hard to make sure we balance. Making premiums reasonable and making premiums be risk-based, actuarially sound can happen, and that's what our program has done. There's some misconception out there that the new pricing methodology increased the amount of premium dollars the program needs, and that's not the case. We would have needed to collect the same amount from all of our policyholders in the old legacy system that we now collect under the new rating methodology. Now we base that premium on actual risk characteristics of the property instead of the zone that property happens to be located in. Second, another piece of the new methodology that's not well recognized is new policyholders come into the program at full risk rates. They no longer come into the program with a discount or a subsidy. And so the doubling of the insurance costs that you mentioned is not for a current policyholder. A current policyholder's premium can only go up the statutorily required 18%. But new property owners have to pay the full risk rate. The third point that I would make is that for the first time, the program is actually able to tell policyholders and property owners what their full risk is. Couldn't do that before. So now folks understand that at some point, their rates are going to go from $1,500 to $3,000, but they're going to go there at 18% glide path. But that number of knowing what it is has got people concerned, rightfully, because now they know what their full risk is and they can take steps to mitigate.
Can you speak to what reforms would help grow awareness of the need for flood insurance and would encourage more Americans to be covered either through the NFIP or through the private market? We've seen over in Europe, certain programs and advertisements to try and encourage, but what are we doing here in the United States to encourage people?
Yeah, there's no question that flood risk is underappreciated across the country, so we can all do a better job of making sure people understand the peril associated with floods and the reason why that financial security of a flood insurance policy is so important. But we don't work on this alone. It's not just FEMA. So we work with, the 48 write-your-own insurance companies that administer the program on behalf of us. We rely on them to do their part to make sure people understand flood risk. We work with community members, the 22,400 communities that participate in the program, try to provide them the information, and many of them do their own campaigns. Many state insurance commissioners do their own campaigns trying to raise flood awareness. So there's no question that we need to do a better job of making sure people appreciate the true flood risk the nation faces.
The gentleman's time has expired. Thank you, Mr. Lawler. The gentlewoman from Texas, Ms. Garcia, is now recognized for 5 minutes.
Thank you, Madam Chair, and thank you to Mr. Maurstad for being here with us today to bring us an update on the flood insurance program. I represent the Houston area, and as our ranking member has mentioned, we have a lot of flood-prone areas and have had numerous 500-year events, both flooding and just rain events. And the biggest priority for me is, of course, accessibility and affordability. The area itself was hit by Hurricane Harvey in 2017 and caused about $125 billion in damages and over 100 deaths. That's what, about 4 times your authorization of $30 billion. In the greater Houston area alone, there are over 332,000 residential properties in FEMA-designated floodplains, and 1 out of 7 projects have sustained substantial risk of flooding and will by 2050. Research also shows that low-income and non-white communities are more at risk for flooding in the Houston area as a result of longstanding discriminatory housing policies. For many people in my district, they really cannot afford the insurance. That is really the biggest barrier. And that is also true for most of minority communities. In fact, some of the distribution of our dollars have been challenged as unfair and with a disparate impact on our minorities. So because my district is 77% Latino and largely working class, we have found that the biggest challenge we have is a lot of rentals, a lot of older population that own the homes and can't afford the insurance. So, I heard you respond to my colleague, Ms. Williams, that you're still working on it. And I just want to implore, I heard the same answer last time. I mean, it's been over a year, at least since I've been here to ask some of these questions. What is it that's keeping you going from putting this new modeling to make it more affordable and accessible? I just don't understand why we keep getting the same answers.
We do not have the statutory authority to develop a program that bases the premium on one's income, which is why it's one of our 17 recommendations and is so important, with not only making sure people that need the coverage in the areas that you described, but that we can develop a program that works for all Americans. So it's simply, we don't have the authority right now to develop that program.
But if you could, what would it look like? I think that was your question, and your answer was, we're still looking at it. I mean,
well, if I said we're still looking at it, then I misspoke. What we don't have is the details. We haven't written the regulation. We don't know all of the I's and the T's crossed. And so what we have said is we're proposing to develop an affordability program that if you're at 120% of the average mean income in your area, you would start to receive premium assistance, not your whole premium paid, but premium assistance. And then as your income goes down to 60% of the average mean income in your area, you would receive more of a discount than the moderate income individual at the beginning of our program.
You're looking at a means-based. Will it be based on household? Will it be based on, for example, we are flood prone. Montana may not. So will you look at regional considerations for you know, as the chairwoman mentioned, our ranking member, you know, California gets hit by fires and floods. For us, it's mostly floods and rain.
Sure.
And hurricanes.
The risk, flood risk in every state is certainly different that we now recognize now, but 98% of counties across the country have had a flood event. So flooding can happen anywhere that it can rain. And so want to work with you to make sure that we have awareness needed to make sure that renters, low-income people understand that they need the protection, but then also work with you to get our proposal in place so that we can design the program that's going to do so much good.
Well, I would hope,
many
sir, with
properties.
all due respect, that the next time we have you here, we don't hear again that you're.
Gentlewoman's time has expired.
Thank you, ma'am, and I yield back.
The gentleman from New York, Mr. Torres, is now recognized for 5 minutes.
Thank you, Chair. I represent the lowest income congressional district in America. The lowest income Americans are hit the hardest by the crippling cost of the National Flood Insurance Program. Under rating 2.0, FEMA's intent on raising premiums by as much as 18% a year for as long as 10 years, and FEMA would be raising premiums even higher than 18% were it not for the statutory cap that Congress put in place several years ago. And so an even stronger cap is needed to protect the lowest income families from rapidly rising flood insurance payments. You brought up earlier the notion of calculating premiums in light of income. And when it comes to housing, the threshold for affordability is 30%, right? No one should pay more than 30% of their income toward their rent. What would be the threshold when it comes to flood insurance policy?
So the program that we designed and the administration supports that we recommended looks at it from the average mean income of the property owner. The affordability framework that we developed actually outlined a number of ways that you could develop a affordability program. So we're certainly willing to look and have a conversation with you if there's a different manner in which we can provide this much needed support.
Is that something you would study, that what would constitute an affordable percentage of one's income with respect to flood insurance?
I would, my sense would be, I'm not an expert in that.
Because that's the approach we take with student debt, with affordable housing, so why approach it differently with respect to flood insurance?
We looked at the most effective way, in our opinion, is what we've proposed. We certainly will look at different ideas if you have them.
I want to move on. If you live in a special flood hazard area and have a federally backed mortgage, you're required to have flood insurance. But not every person who lives in a special flood hazard area with a federally backed mortgage has flood insurance. Do you track noncompliance? And if so, what's the number of people who fall into that category?
So we do not. That's actually a lender requirement, not an NFIP requirement. And so we don't track those numbers. I think there's been some study done on it. We could provide you the information that we have, but the lenders would have that information.
I'm assuming the more participants in the program, the more financially sustainable the program?
Well, actually, from an insurance perspective, it depends where those policyholders are. So it's not as simple.
Do you have a sense of where the enforcement is breaking down? As
where
far as the mandate?
I don't know that the enforcement has broken down, so I can't comment.
Just judging by the noncompliance, that would seem to suggest that there's a breakdown in enforcement. You know, FEMA has a new methodology, rating 2.0. I've heard complaints that the new methodology for calculating premiums is largely known only to insiders and is opaque to the rest of us, particularly state and local governments. Does FEMA have any plans to make its methodology for calculating premiums more accessible and available to the public and pertinent stakeholders?
Mm-hmm. So the rating methodology that we developed that for the first time reduced 1 million policyholders' premiums on an average $60 a month. We've provided that methodology publicly already. We've also provided premium calculation worksheets and a number of other tools on our website that agents and companies have.
So you feel like there's sufficient transparency?
I believe we have been very, very transparent.
So we've heard otherwise from New York State. Do you know why people are under the impression that your method is insufficiently transparent?
Sir, I think that we've done a good job of providing all of the information someone needs.
So where's the misunderstanding?
To assess the program, and GAO will be issuing their.
Do you have a sense of where the misunderstanding is, or
Excuse me?
where's the misunderstanding? Because there seems to be, there's a common complaint that I've heard is that there's a lack of transparency around your methodology. You seem to be claiming otherwise. So I want to understand where's the breakdown in communication, where's the misunderstanding?
I don't know the answer to that.
It's something I would want to explore. Would the program be solvent if the federal government paid the debt associated with FEMA, with Katrina?
Well, the program is backed by the full faith of the U.S. Treasury now, and so, solvency is.
But apart from the full faith, the program historically has been self-sustaining, self-financing. Would you be? Go ahead.
Yeah, I mean, actually, it has not been self-sustaining, and the very nature of a catastrophic insurance program indicates that it would be very challenging for it to ever, if not impossible, for it to ever be self-sufficient.
The gentleman's time has expired. I'd like to thank the witness for his testimony today. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witness to the chair, which will be forwarded to the witness for his response. I ask our witness to please respond as promptly as you are able. This hearing is adjourned.